Welcome back. You're watching Markets at Noon, and let's focus on the sales numbers. And we'll be talking about M&M Auto. SUV growth has slowed down due to supply bottlenecks. We're also looking at manpower shortage that has dragged down the May SUV output. But then let's discuss more on this. We are joined by Nalini Kant Golakunta, CEO, Automatic Division, Mahindra & Mahindra Limited. Hi, afternoon, and welcome to the show. SUV growth slowed to 11% in May. You've cited manpower shortages at suppliers. How many units are you losing monthly, and when does this get resolved?
Yeah, so firstly, I think the numbers have come out quite well. 11% growth, 58,000 numbers for the month. So strong set of numbers. Demand, the good news is demand continues to be quite robust for us. And it's the same story on LCV as well, 24,000 vehicles and 19% growth. Like you said, both of this have had some constraints on supply chain. I would say that at this point in time, it's hard to say exactly what the actual number would have been without the constraints being there. But my sense is we could have easily added 10-15% of additional growth that we could have seen at this point in time. So that's something which we could have done. Like I said, the demand is robust quite to that extent. And we foresee this challenge continuing for probably the next few weeks. And by early July, we believe that we should be able to solve this issue overall. And it's not just us, it's the ecosystem which is having this challenge as well across the industry.
When we look at the exports are up 37% in May. Now, which model are we talking about? Also, the market that's leading to your international push this year.
Yeah, so a few areas playing out well. Exports was definitely a fair bit of a highlight for us. First and foremost, the markets of South Africa and Australia continue to be quite strong for us, and we're doing well there. But beyond that, we've had a large deal that we had in Indonesia, which we had won earlier this year, and we had talked about it as well. And that has really helped us because the volumes, shipments from that has started to happen over the last 60 days. And you would have seen that in April and obviously in May as well. This will continue until we finish the order. It is an order we had taken for 35,000 vehicles. And that drove some of the growth as well.
What could be the volume guidance that you want to give for Q1 FY27?
No, overall, we're not giving a quarterly projection at this point in time, but overall for the year, we are projected to be in mid to high teens growth for SUVs and double-digit growth for LCVs. And we are quite confident that we can go hit those numbers. So, and given the robust demand profile that we are seeing over the last 60 days since the year started, we're confident we'll be able to hit those numbers.
7XO demand so far exceeds supply at 9,500 units. Now, when does capacity hit 60,000 over here, and does that fully unlock by September?
Yeah, so the current capacity that we have is about 10,000 or so. We have some small additions. We'll be doing it later part of it in time for festive. But in general, very robust demand. And I would say that it's robust demand across 7XO and 9S, both of these products put together. And that's really where the demand is coming from in the 7-seater space for us.
EV crossed 10% penetration in the last 2 months. Is that the new base for FY27, or we are looking at a one-time spike?
No, I think we see sustained demand across the product portfolio for us. And we hope to stay above the 10% penetration mark, even as we scale up the ICE SUVs as well. So these numbers should see an upside on top of what we are doing. We are roughly doing about 6,300 to 6,500 per month. And we think that there's room to grow from here and stay above the 10% penetration, even with the ICE going.
Mahindra Electric turned PBIT positive at rupees 287 crores for the full year. When does EV margin reach ICE parity?
No, I think the best way to look at it is what the customer is getting. And from that perspective, the price parity is already reached for customers for most of our products are 9S if you look at it against the 7XO. So from a customer benefit perspective, it is already there, which is why the demand is quite robust for our EV portfolio as well. The actual numbers in terms of the margins and everything is highly subject to commodity cost and some of the fluctuations we are seeing in terms of input costs going in. So it's hard to predict at this point in time, and we are not giving projections overall in terms of our profitability.
That's right. Memory chips. Now you're buying at a premium in spot markets. What's the volume risk to FY27 guidance if this persists?
Currently, we are not seeing a volume risk per se. We are, I think we talked about it in the analyst meet as well. We are ensuring that we have supply and we don't have a supply challenge on memories. There could be an impact in terms of input costs on memory itself. As you know, the memory chips costs have gone up. So that's something we're actively mitigating. But from a supply perspective, we are ensuring that we have enough supply for the foreseeable future.
Auto margin held 10.4% in FY26. Now with commodity inflation and GST headroom partially used, what's the margin band for FY27?
Yeah, we're not giving a guidance on margins and profitability at this point in time. But of course, we are working actively to mitigate any of the commodity challenges. And if with some prudent analysis, we feel that we'll have to pass on the cost to the customers, we'll go ahead and have price increases to match what the input costs are. But we're not giving a guidance on profitability.
All right. Thank you so much for joining us today and answering all the questions. Thank you for your time. And with that, it's a wrap on this edition of Markets at Noon. But a short break, and post that, we'll get you all about your company. Stay tuned.